All right. Hello, everybody. For those of you who don't know me, my name is Tremaine. I am your go to financial strategist, and we are helping you manage money better. Today, I'm going to be digging into something that impacts the cost of doing business, and that is tariffs. So, I will explain what tariffs are, talk about who it impacts, and then give you some tips on what you can do to um, hopefully save a little bit of coins and really navigate this well. So, first, let's talk about it. What are tariffs? So, tariffs are a tax placed on imported goods by a government. And so, this is typically done if the government is trying to protect the local industries, balance trade agreements, and or raise revenue, right? Because it is a tax. Is it a way to bring in some extra money? And unfortunately, for business owners, that means higher cost. It means slimmer margins. And it's typically going to have to cause you to raise prices that you did not anticipate you would have to do. So, the more you understand about tariffs as a small business owner, the better equipped you are to navigate what you should be doing so that it doesn't desecrate your business. And the other side of this, as a consumer, it's important to understand how tariffs work. So that way you can kind of see why particular prices might be increasing, understanding if there has been a shift or tariffs have been imposed. So we're going to dive into four different types of people that tariffs impact and who really feels it the most, right? So, first, you have the importer. The importer is the person who buys the goods and brings them into the country, right? So, legally, they are the person that is responsible for paying the tariff. Now, that does not mean that they are the only person that feels the impact of the tariff, right? The next group of people that are going to feel a tariff's impact are business owners, because business owners are going to have to either absorb the cost or raise their prices. And no matter what you decide, that is going to impact your business. So, absorbing the cost just means that whatever the tariff is that is imposed, that tax, you are going to eat that. Now, most business owners, if you're paying attention to your profit margins, you might see this tariff and you're like, absolutely not. Right. And so you're going to pass that on to the customer or the consumer, and that means the price will go up. Right. The next group of people that are going to be impacted, of course, are consumers. And now this is probably the largest group that is impacted. Now, consumers are going to end up paying more at checkout. So things that might have cost, 20 bucks, you may see that now it's 25. It might be 28, right? Depending on the tariff that has been imposed, the price is going to increase. And so that is going to impact how you are managing your household budget and if any changes need to be made so that um you are able to stay in alignment and not spend more than necessary. And then the last group of people, the group that we primarily serve, is service-based business owners. Now, in service-based businesses, you may not necessarily feel the tariff directly because you probably don't have goods that you're importing, but you may feel it through increased cost for tools that you use for your business or materials, and maybe some equipment. So, and you might even see like a particular software depending on how that software is made and what's required to run it, right? So this is going to impact our cost of goods, right? Because the cost to import whatever we need is going to go up. It might impact your pricing strategy. It should impact your pricing strategy, and it's absolutely going to impact your profit margins. So if you are being taxed on things that are imported, that's going to eat up profit. And so you want to pay attention to that. And then lastly, it's going to impact inventory decisions. And so that's probably the one of the biggest things people are thinking about, right? Now, how can we avoid or reduce tariffs as a business owner? There's a couple things that you can do um, to work smarter to make sure that any additional costs incurred are justified, right? Now, the first thing, of course, is you need to know your product's HS code. Now, some of us, you hear HS code and you're like, I don't know what that means. You probably never heard of it before, but it's the Harmonized System code. Now, this is how products are classified. And this is going to dictate what the tariff rate is going to be. So, knowing your product's HS code is going to help you make sure that you are not paying the wrong rate, right? Especially if you end up selecting a code that has a higher rate than what you should be in. The next thing that you can do is use free trade agreements. Now, if you are in the US, as of April 2025, if you know what's going on, it's looking crazy, right? Um, but that doesn't mean that free trade agreements don't exist in other places. And so, if you identify where free trade agreements exist, sourcing from those countries can reduce or eliminate tariffs. So, you won't have to worry about paying an additional tax for importing any goods. Strategy number three that you can do is change the country of origin. So, if you do assembly or packaging in a lower tariff country, you may legally qualify for reduced tariffs. Now, with this, though, you have to meet the substantial transformation standard, meaning you can't just have it go somewhere else and you slap an extra label on it. That's not good enough, right? So, you want whatever you decide, you want to make sure that it meets that standard so you don't end up hurting yourself um, more in the process. The next thing that you can do is work with a customs broker. So, this is going to be somebody that's going to help you avoid misclassifications, help you make sure you don't miss any paperwork, and identify opportunities where you might be overpaying, right? This is similar to working with a financial professional, right? Where they're going to help you cover those blind spots where you might not have known have been there. And typically, they are going to be worth whatever they are charging. All right. So, those are some things that can help you reduce tariffs if your business is going to be impacted. Now, let's get into some questions, some common questions around um, tariffs and get you some answers. So, question number one, this is probably the most common. What is the difference between tariffs and a sales tax, right? So, tariffs are import taxes. Sales taxes are applied at the point of sale domestically. Okay, that's the difference between the two. Excuse me. The tariff is to import whatever item into the country. The sales tax is applied when the item is sold. So they occur at two different instances during the process of selling the good. Now, since we're talking about this, that means that when you are doing your pricing, you have to pay attention to all the different places where additional taxes are imposed. So that way, taxes are not eating up your profit. Okay. And I didn't have the foresight to even think about this, but so many of us think about pricing as a way to be competitive and will often price ourselves to the bottom. And once you add in all the cost of doing business, taxes being a huge part of it, your business isn't profitable anymore. And that's what's going to happen to a lot of small businesses if they don't get ahead of this. All right. So now, question number two, who actually pays the tariff? The supplier or the consumer, right? Now, the person who is doing the importing, the importer pays the tariff. Suppliers may adjust the pricing, right? But the legal burden is on the buyer, the person that is importing the good. Why do tariffs raise wholesale prices? Because suppliers are going to bake in those fees into your cost. So if you are even trying to get things in bulk, understanding that that's going to be part of the cost of doing this business. Question four, can tariff rates change? Again, if you are here in the US in April of 2025, you know that answer is yes, right? Um, Tariff rates can change based on trade policies, it can trade on elections, economic conditions. Yes, tariff rates can change. Question number five, where can I look up the tariff rate for my product? You can go to the US Harmonized Tariff Schedule, or you can consult the Customs broker, right? Now, of course, you probably want to do both, but having a general idea of where you can go to find out this information, of course, is good. Question number 7. This is probably one of my favorite ones. Does drop shipping avoid tariffs? No. Right? We like to think of drop shipping as a way, like an easygoing business, but no. If the goods are entering the country, somebody's paying the tariff, even if it's not you directly. All right. Next question. Can service-based businesses be affected by tariffs? We talked about this a little bit. Yes, through increased cost of imported equipment materials or software licenses. So just because you are service-based does not mean you're not going to feel the impact of this. When tariffs are imposed, nearly everybody in the economy feels it, right? Because typically it's more than just one or two goods that um, are experiencing a tariff. So if you might see it across particular food items depending on where the country of origin where the foods are coming from. So this is not just a, oh, I'm a service-based business, it doesn't impact me. It does. All right. So, um that's to help you understand a little bit more about tariffs. We share content like this multiple times per week. And so, if you want to know more about different things, of course, let me know in the comments if there's anything else you'd like to be broken down in simple terms that you would be able to understand a little bit better. Subscribe to the channel, right? So that way you can be notified when new videos are coming up and when we are live. If you want more information on grants and other resources to manage your money better, you can tap the link in the description and sign up for the free newsletter. We share information weekly. And then if you want to work with somebody one on one, just to help you get a better understanding of what things should look like in your business, especially around getting more profit, how to redistribute some of that revenue that's coming in to build some wealth. Tap the link in the description and you can schedule a one on one call. And we will see you guys next time.